Nvidia this week announcing a 10-for-1 stock split. It's the 8th stock split announced by a company so far this year, and historically these moves have been bullish for the companies that announce them. Analysis by Bank of America showed that on average, companies announced a stock split, they outperformed the S&P 500 index in the following year, and it's not by a little, it's by a lot.
Yeah.
And I was thinking about this, why would this be? And they break it down by decade, so it doesn't matter which decade you look at here. Stock splits tend to be good for performance. Why would that be, though? Maybe because that's a good problem to have. If you have to have a stock split, that's because you've been doing well in your stock. The price has gotten a little bit out of range for the everyday ordinary investor. So I think it's just the cohort, the group, it lends itself to that.
Well, I find this such a fascinating phenomenon because theoretically, I can today buy a tenth of a share of Nvidia, for example, or a quarter of a share of Nvidia.
Yes.
But there's just something psychologically about owning one share. And obviously there's an affordability difference between having a stock that is worth $100 a share and one that I have to pay $1,000 a share for. So you see sort of the psychological importance of it. What's interesting to me is that number is pushed up by the average quite a bit because 30% of the time stocks after they split are down 12 months after. So, you know, it's still the majority of the time and the majority of the stocks that experience an increase, but there is a substantial minority that does have declines. The other interesting thing that Bank of America looked at is that there's been over time a dip in the number of splits, but recently there's been a little bit of a resurgence, and they pinpoint 36 companies in the S&P 500 that are above $500 a share. So maybe they would be the next up that are potentially eligible for something like this.
And not only that, there's a side bet that if a big company that's getting a lot of headlines splits its stocks, maybe it's going to join the Dow, something along that
exactly.
lines. That's not the case here. We've heard no inklings of that, but there's a lot of speculation.
Right, because the Dow is a price-weighted average. The folks who put it together don't want to put a very high-price stock in there because it'll really skew the Dow
Apple,
overall.
before it was admitted to the Dow, they did a stock split. So that's where that comes from.
So we'll see if it ends up happening.